Good morning, Gold Investment Letter. This is Eric Mashinsky. It is August 24th in the morning on Thursday. We're right in the final moments of the summer doldrums in the mining sector, particularly the junior miners. Uh, and I wanted to share this with everybody just so that anybody who's newer and hasn't been around GIL, Gold Investment Letter, I want to just go through some of the things that we've hit on that have actually changed certain people's lives, bought them homes, um, put their kids in college, many different wealth creation opportunities in this sector. I'm just going to walk through some of the ones that were reality, what we saw for our members, our subscribers, and just the life-changing gains that we've had here many times since this letter was launched in October, excuse me, of 2011. And that was at the top of the bull market, the bull cycle in gold and mining stocks. So, I ended up building this newsletter in a very bad bear market from that time until uh, the late 2015, early 2016 level when we finally saw what was a big relief rally in the miners and in gold. But what I wanted to do in walking through this too is I wanted to show a couple of examples of, and we're going to start with this Gunyear Resources, because if there's any market that right now reminds me of in recent memory, it's the 2015 bear market bottom. So that was a 4-year bear market in mining stocks, and it was brutal. And we are in a very similar boat right now, and it's been well over 3 years this time. And so it's easy to throw this sector out the window and go chase Nvidia, but I think that's a big mistake. I do. I think it's a huge mistake. I've got the ability and the background. I could go chase Nvidia and buy Apple and Facebook and look for AI plays and call it a day. I don't have to work anymore. The folks that have been here, I just say that because, if you're listening to a letter writer, for example, like myself, you would hope that I have the abilities and or track record of showing that I can create wealth for myself outside of subscription fees or marketing initiatives, but actually from my investments. And that is where the bulk of my personal wealth has come from. And what ended up occurring for me, and this is something that can happen for you. And some of you have plenty of wealth already, and it's more about conservation. And that's where gold, physical gold, comes into play the most. I think as a very defensive asset, the safest asset to me on planet Earth is physical gold. You could also look at it like a variation of physical gold, even though I don't like to own much paper. There are some safe ETF products that have the gold and are audited and that exist, probably better than GLD. But at any event, that's the draw for gold is the safety, the store of value that it is really shown for millennia. But primarily in the U.S. and really when the central banks clipped the link, the U.S. clipped the link to the dollar of a gold backing in 1971, which is a little over 50 years ago. And I like to say that in 50 years we've made 50 times our money in the price of gold, which is real. That's a real thing, and that's not going to stop. I'm also a very big bull in Bitcoin for various reasons, but it's not because it's a store of value yet. That day will come, but that day will come when Bitcoin is widely adopted, much less volatile, much bigger market cap, and is probably trading in the 700,000 to 2 million level, let's call it, for a start, where I would even start to entertain it as a store of value. They're two complementary assets to me, and I'm still in Bitcoin and crypto for venture capital like returns and huge volatility risk and also early adoption risk. So that's a different story for me. But the story here was that I was able to make big gains, big returns on a handful or two. More than that. I mean, I'm going to just show you guys some of the 10x or more plays that we've had here, but there have been plenty of triples and five baggers and eight baggers and six baggers and things in particularly the premium service. So, if you guys want more of these individual names, if you believe like me that we are in a time where there are extraordinary values to be scooped up in the mining sector, in the commodity sector, in the metal sector, you want to join at least the premium. We have a couple of elite slots that are open, and we just invested in a private placement of a company that has a 1 million ounce gold resource and bought it for $2 million on the market cap side, which is stupid. And we got full warrants for 3 years. I passed the hat with elite members first, and then sometimes premium. There's room there. We did half of this financing. It was 1.1 million Canadian financing, which we did about exactly half of that. And these are the type of opportunities that I'm looking for, because we've had a number of plays that you're going to see. About half and half of these were open market buys only, and the other half we finance them at their lows. And a couple of them were right around this timeline where I'm talking about that 15, 16 level. Uh, you know, and so let's get into it. I just wanted to show you some examples, some real life examples of what happened here. It's all verifiable. There's no problem if you really. I'm not looking to placate trolls, but if you're literally looking to potentially get an elite membership or a premium membership and just want to verify what I'm saying is true, you can hit up Erica, Erika, at phenom.ventures, PHENOM.ventures, and just ask for verification of the emails that went out at various times. And some of these were initially to premium members and then went out to free members. So that's really the risk. There's two different things you're missing as a GIL free e-letter member. You're missing actually three things. You're missing the early stages of the picks. I tend to give that. When I find something that I'm buying, I share that with elite members right away, and then we get a chance to accumulate smaller names before giving it out to premium, and then also if sometimes it goes out to the free. So you're not getting more than you know 15 to 20%, 15% of the ideas, maybe 10 to 15% of the ideas that go to the premium and elite members. And so your risk will be something to the effect of, I'm going to show it to you on a few of these examples. And where these were released, and so there was a lot of money to be made just by being a reader here, but there was a lot more money to be made by being able to get them first. And then you're not getting them first, you're not getting as many picks, and you're not getting deal flow. So if you're an accredited individual or an institution, I would encourage you. I think one of the big strengths here is that I'm very particular with deal flow. I do go into small deals because, especially right now, they're on the smallest end of the junior miners, are where the biggest bargains are, because they've been left to die. And some of these companies have real assets, very, very large assets that I believe in a flippening of the bearish to bullish cycle will command between 10 and 100 times their current valuation. So I'm not afraid to go into. In fact, we have a subset of our model portfolio in the premium membership that is titled the venture portfolio, the tiny cap, where you've got to have less than a $5 million US market cap, a real management team, solvency, real projects, and a good capital structure, and be best of breed in all those categories to be able to make it onto that list. And we've got 8 to 10 beautiful deals in there, and we're going through and financing a number of those that are very cheap, and we're getting cheap warrants that are long term, 3 to 5 years. So anyway, look at this one. This is where I want to talk about the similarities in this market. When 2015, I found this deal right around here, I think, sometime in the summer of 2015, called Gunyear Resources, and it was trading at about a penny to 2 pennies Canadian. And at that time, that was less than $1 million market cap. When we got to this point, when I started to recommend the stock to premium members, it was literally a half. It was trading at a half of a penny by a penny, and I believe that the market cap at that time was about $400,000 Canadian. It was like nothing, but they had multiple projects in Sweden that I thought were viable, and they are viable. Big, exciting exploratory projects in gold and nickel. There was a nickel asset that they had acquired that is fairly sizable that they still own. But this was one of these cases where it was like, okay, well, are they going to make it? And I said, they will make it because I'll make them make it. We're going to finance it and we'll keep it going after we accumulate a big position. So I literally started buying this, and there were people that did get stock at a half a penny. Now, it's very difficult to get a lot at a half a penny, but whether you got it at a half a penny or a penny is the difference between um, whether you made 40 times your money or 80 times your money. Call it, I'm sorry, 39 times your money or 78 times your money. We came out with this deal here. There was nobody hardly listening. The people that did listen, I mean, we had months to buy this thing to around a penny. I continue to recommend the stock much higher, into late 16, where I encouraged elite members. We led a $300,000 offering to keep the company alive at 3 cents with a 5-year 5 cent warrant. Okay. So theoretically on this is not what you would have made because these are your decisions, guys, in terms of when you buy and when you sell on any of this stuff. I'm just telling you from technically where it was recommended, where you could have bought in, to where you could have sold it on a top tick and a bottom tick, which is not realistic. I understand that. I'm just giving you a gauge of where these stocks were recommended and where they went eventually, and you could have literally made this much money. I recommended that people, if they were low on cash, take stock when it was in this fall phase, um, to sell some stock to buy it at 3 cents and get the warrant as well. So if you think about it, let me just use a round number, half of a penny to 40 cents. Okay, so 80x. But if you had the warrant, if you swapped your shares, which was it was at a premium to par, 3 cents in the market, and whether you did that or you didn't, but if you did do that, if you just bought it with cash, it's even a better deal. But if you swapped it into, you would have more shares in the big run. But if you swapped it over and had a 5 cent warrant, so I'm just saying if you had, let's call it half of a million shares, um, that half of a million shares, let's just look at this. That was costing you 2,500 bucks Canadian, half a million. You roll it into a 3 cent placement, um, and then get a half a million warrants at 5 cents. So at at 40 cents, you're talking about times 0.4, 40. So that's $200,000. I'm using a penny higher than it actually went. $200,000 Canadian on your stock, and then you made 35 times your money, 35 cents times 500,000, or did on paper another $175,000. So $2,500 into $375,000. Again, you can miss that by a big factor, and we cleaned up. We cleaned up on Gunyear. um, let's go to the next one. Here's to show you that I'm definitely not perfect, and there have been times, like some of you have even seen, since call it 2021, when I was more bullish on things like Giga Metals and Phenom Resources, and moving some of my big profits from crypto over into these miners. And I thought they could go from there. And so, some of those positions I've continued to accumulate big positions. And I know how this stuff can work out because I've had this. This is a great example, this Encore Energy. And these are 10-year charts, by the way, just to show you the movement of these. So this is a situation where I thought I was a genius right away because I called this stock. So just so you can follow this stock split 3-for-1. So actually, the numbers that we were involved in, you have to cut these prices by a third. So, right now, 328. That means that it's trading at the equivalent of $1.09 or something like that. Um, One third of that is the equivalent of where the numbers that I'm going to talk about. Um, and because those are the numbers that I remember, which is when I went to Bill Sheriff. I think it was in 16. The gold stuff was kicked up. We had money and we kicked up big from January until September when GDXJ tripled, and a lot of our gold mining stocks went up 5 to 10 times. And I started hunting for uranium, which had been in a bad market for a while. I contacted Bill Sheriff and I said, it was at a nickel. I started buying a position, a nickel Canadian, and very little cash, very little movement. I got the story from these guys that were ex Energy Fuels founders that built up a big uranium score, a multi-billion-dollar exit in the last uranium market. I really liked their strategy on the ISR side. I went to Bill. What ended up happening is I recommended the stock at a nickel. We did a 6 cent placement that we led as a group. I don't remember the exact amount we did, but Bill Sheriff had other investors in Toronto and things that wanted to get involved. So we got a half of a warrant at 10 cents. And I think he raised a little more than I wanted him to, but it was like maybe 1.5 million, and we did 600-700 of that or something to that effect. And so people got their positions on it: 6 cents, 5 cents, 6 cents, whatever. And we had that half a warrant that was good for, I think, 4 years on the 10 cent half a warrant. And this is what ended up happening. You see this volume spike here. So in dollars that they show on stock charts was 10 million shares up to 45 cents. I don't know that this is right, so I'm just going to tell you that what ended up happening is we did that placement in late 2016, and then all of a sudden the stock, I think it might have, if it maybe it only did triple to 15 cents. So again, a third of these prices is what we were dealing with. But that volume was incredible. We actually had, in my recollection, I thought we had 20 million shares that traded up to 20 cents. Maybe it was 20 million shares up to 15, but we took out, and this was where everybody was included, including the GIL free members, at 12 cents. We took out an institution's 12 million shares in an open market cross. And then, so that the thing ended up going up from there right away. And I thought I was a genius. We were up almost 3 times our money or more from the initial recommendation, the warrants. And then I was 2 years early. So look at this. I was 2 years early on the uranium move. Along the way, a lot of people gave up, and a lot of people came to me and said, what's going on with Encore? It went back to 4 cents, if I recall, the equivalent of 4 cents. So yeah, 12. So cut that into a third. Maybe it did only go to 15, not 20, from what I recall. I thought it went to 20. No big deal. Doesn't matter. We it's actually a better thing because we didn't sell any. I didn't recommend selling any. But what I did, I was very consistent all along that I was going to accumulate a bigger position at Encore. So that took us, when you want to look at when we first went in late 16, we had to basically wait a few years, 3 years before it started to really pay off. And the stock hit a high in 21. So this is where you guys, it doesn't, this is one thing I will tell those of you that this is a common error, a human error, but a big error for investors is when the timing on stuff and the rush. to move your money around and shuck and jive. I used to be a broker for 16 years, and I'm very familiar with that attitude. Not thinking very long term. But what I've learned is that I tend to turn over to the world, the universe, God, the market gods when an investment is going to work out, um, and how that's going to play out because it doesn't go to my according to my box or my time frame. What I'm most concerned with is that I'm ultimately correct. If I'm going to be ultimately correct, I will be patient and I will take more money and continue to accumulate like I've been in some of the mining stocks that I've talked to you guys about that I know are going to pay off big, but we have to wait. And I've been early and I'm down on an unrealized loss basis. Like, for example, Giga Metals, I'm down about almost 40% on paper. And I just looked today and I've invested over 450,000 US dollars into Giga for a bit of over a 2 million share position in the open market. And I'm going to make a fortune. Watch. Watch what happens with Giga Metals as we go forward. It doesn't matter. These things can become blessings. But what I'm showing you here is it hit a high of 681. So that means it was like $2.25. It was actually $2. I remember it. $2.27 was the high. So here's a situation, $2.27, where we got involved. I'm going to call it a nickel because we were able to buy this thing at 4 to 5 cents first before we did the 6 center. So this is when I officially went on record, but I'm just going to call it, let's use 6 cents, whatever, doesn't matter. 2.27 divided by 0.06, 38 times our money. And if you had that half of a warrant as well, 2.27 divided by 20, because it was a half of a warrant, that's an extra 11 times your money, about 50x we've made. On paper, about over 50x if you take it at a nickel versus 6 cents, 50x. So this is where, again, our resolve, we had to earn it. We had to earn it. And I actually have bought back some Encore recently, by the way, because I think this is about to go back to its highs at a minimum and probably go over double digits Canadian in this uranium bull peak cycle. And it's turned into a massive winner. When you have winners like that, you can have a lot of losers. I've talked about this many times. You don't get discouraged if you have somebody, whether it's yourself or me, and you listen to me and you buy something that I'm very bullish on and it doesn't go up. Maybe it goes down 50%. Whether it's because I just had bad timing, I was wrong on the stock, or it was usually the reason for that is because of the cycle goes into a bad market or whatever else, and we just get caught in that liquidity drain. But think about this. So we had 2,500 turned into 375,000 on Gunyear. And let's just call it somebody who put in 10K equals $500,000, or 10K on paper could have turned it into 380 if you didn't do the placement. So those are big, big wins. Let's just say you had 10K investments that you made, and 5 of them go to zero, and the other 4 are down by 50%. So you have 20K plus, I'm going to use the 380, $400,000. You 4x'd your portfolio with 5 deals going to zero, which I think I've had 1 or 2 juniors that actually went to zero over time that went bust. 50%, yes, down on paper. No problem in this sector. It's happened many times for me, and I don't get fazed by it because of this exact format, which is a venture capital format. You have to have a multiplied across the board investments because we don't know which ones, even though that we like certain ones better than others, which ones are going to hit big and which ones may struggle. I use my own best practices with how I analyze this stuff, and sometimes I'm off. It doesn't matter if you keep and are able to keep planting seeds, especially in a market like right now, guys, you're going to like me in the coming years. But, there's other people that get really upset if I'm bullish on a play and I'm way off, or, I was buying it on the run up and it's kind of emotional and people are getting chasing it or whatever. I've had those errors. There's no question about it, where I would take some of those back with when I got involved in a deal or whatever. But again, a lot of these, and we'll look at, like, we have Bravada on the table right now, where we initially got involved in that around 4 or 5 cents. It's back at 4, and it ran to 40 in 2016 in a very quick period of time. But I remained bullish on that too long. And then the company didn't really execute like I had hoped. So, and then we hit the bear market, and then, there you are. You go back to where you were. And that's why you want to be an Elite or Premium member, because you had a chance to take huge profits, and by the time the free letter people got the recommendation, we were already up 4 or 5x. That's just how it's going to go sometimes. Other times you do get, lucky, and you'll get something cheaper than the others got. Abra Plata, which is a story that I really like, guys, because it was 2019, right around here, end of 19. The company was facing bankruptcy because they had a big payment on this Diabillos silver project in Argentina, and and uh, and there was nobody in sight during the market to fund the deal, and it was a real moment. I remember the moment at my desk. I got off the phone with the chairman, Rob Brugman, and I said to myself, "All right, so either this thing's going, this is not an ideal situation. They've got to come up with this payment in a month. It's going to take up any cash we raise, and then they're just sitting on the option of this asset. They still have to do a lot of drilling, but it was an exceptional asset. And something told me, I said, silver's coming back in a bigger way, and this deal has a special asset. And I said, okay, look, if you can raise 200, we'll take 300. It was something like that, or maybe 400,000 we did. And it was one of the private placements where I let any of our guys in Elite or Premium do as little as, I think it was $7,500 Canadian, because I said, this is really risky. This is a very risky deal, but I'm going in. I think I put in 25, and a lot of guys, I don't think anybody did more than 50, and probably even less than that. I encourage people to do some, but not do a ton. But we saved that company. Absolutely, we were a part of saving that company, along with Rob, who was working his butt off to keep it alive. And sure enough, within 2 years, stock hit 82 cents. So we had, on this one, we had, what is that, 10, 16x, 16x on Abra, on paper, on the move in the stock. And then if you had the warrant, we had a full warrant at 10 cents. I still own 700,000 warrants at 10 cents in Abra Plata. And I exercised over 1 million and before, I think, and have taken a bunch of profits in that big run up, made a ton of money, still have, free exposure with a 200,000 or 700,000 times 20 cents. So I'm still up 140,000, and I already took off hundreds of thousands, and I put in 25K. So we have 16x plus. If you had the dime warrant, that was 72 cents profit, which would be 14x. So that's 30x if you were involved in that placement. But I also recommended it to folks at a nickel, and we bought a lot of that up to 6 or 7, 8 cents. And there's another one, 30x. That happened. That was here at GIL. This was us. I'm not afraid to stick my neck out in bad markets, and buy stuff that nobody wants, because I've had this happen to me so many times. And it's these are the ones that have made me the most successful investor. We had a lot of fun. There's some deals they don't work out. But before I get into the golden triangle plays where we made a fortune fast, let's look back at what made this newsletter survive. Initially was a company called Zenyatta Ventures. This isn't a great chart, but we needed to go back actually 11 years, not 10, to show what ended up happening. I made Zenyatta my top pick at 18 cents a share in August of 2012. And by July of 2013, I remember it well, the stock hit $5. And we bought that stock well into the $1.50 area. I knew I found a monster, but let's look at five divided by, let's just call it 20 cents. It's 25x. And so I was the only newsletter writer on the planet that was covering regularly Zenyatta Ventures. A lot of you even still, maybe you found me back then and you're still here. If you are, thank you so much for sticking with me through the ins and outs, but and the ups and downs. But you know, that was one that put GIL on the map with a lot of Canadian investors because we nailed that one, made a lot of money, and you know, look what happened. It, like happens a lot. Had a long bear market after that, and it actually just went to new highs recently. I don't follow that stock anymore, but that was the first one that was my. I think that was my first 20 plus bagger. Might have been my first like 12x. I think previously I had only had a 12x like in the public markets, something like that. I think that was the top 12 or 15, but that was my first 25x in my career. And I've been in the business as a broker since 1995. I'm no longer one. Um, and then let's just look real quick here. I just wanted to show you guys what gold investment letter right now. I'm putting out videos or I put out a blurb about a company. If the market is so bad, you barely see a reaction from all of you. I have over 40,000 people on this list with high open rates. So thousands of people open the email. A lot of you are very active in investing. And sometimes we have crickets. That tells me we are very close to a bottom in the mining market. But here's a great situation that we caught on quick right here. Premium members, I believe we recommended Garibaldi in July of 17, August of 17. It was right on the bridge of that, but it was around 28, 30 cents. And there were really two newsletter writers that were covering this, BMR out of Vancouver and myself. And we really were super excited about the Nickel Mountain nickel discovery. And this thing went, look at this. This went from, 11 cents. I was not involved. Actually, it was 11 million shares, but it was 14 cents to a high here of 527. I want to say we initially recommended that at 28. Let's just call it 30 cents. And so 30 to, $5. Um, and then but look at this. This is where, just so you guys know, if you think I've lost my impact in the markets, so be it. Because I was very quiet, obviously, during 2021, 2022, after getting sucked over into crypto for my own portfolio and some others, and then basically getting sick last year for a long time. But I'm back in full swing and growing this following while we're in a bad market, and things change fast. They can change very fast, and I have thousands of wealthy, substantial, sophisticated, smart investors on this list that through thick and thin, there's a lot of them. Some people leave. I think, one of the things that has struck me about the gold investment letter over the years is that before I went out and advertised and did a social media campaign that brought in a lot of investors that were just not who I was looking for, when I did this and built it up from scratch myself, and doing everything and bringing in organic followings from press releases and blog reports and things, which are coming back, by the way. And I grew this letter. I don't know what we had on the list, but I'm thinking back to the heyday, which is when you're talking about 18, 19, 20, before I started to get quiet and before we started some of that marketing. I averaged for 2.5 years, I averaged over a 42% open rate on the free letter, which is pretty darn big. But I also had a very high unsubscribe rate. So I guess either you guys love me or hate me, but I will say that I've had a lot of really loyal people, and the only reason I'm back to being really active right now, guys, is whether you believe me or not, it's for you, because I want to see this through to the next big bull cycle, help to make people that have trusted in me come out of this thing way ahead, way ahead. That's what I'm here for. And I'm going to commit to that. I'm committed to it. Otherwise, I could just manage my own money. I got very wealthy from these type of big wins, parlaying a chunk of that into crypto at the right time and making hundreds of times my money in certain things that, I've lost millions back with the bear market in crypto, but I'm set for life. I don't have to ever work again. I'm here simply for the reality of the market circumstances. I see the opportunity is huge, and to come back and be here for you guys that have been with me, and that the newer people that came on board, great. We're gonna have a lot of fun, but you have to bear with me. Through God forbid we get a bid in this market at some point, you're gonna see that the gold investment letter. One thing that I do, for all my flaws, I pick giant winners fairly regularly, more regularly than anybody else you're going to see. And I also will be one of the few, I believe, people that are going to be out there advising my folks to be cautious and to take profits when we get into a bubble. Um, I'm not going to be chasing this stuff forever. I'm going to be more disciplined than ever in this point in my career. But look at the volume on this: 34 million shares. Uh, we had 42 million, and up here, 28 million, 37 million. There's another 43 million. There's about 200 million shares traded at an average of $2. You're getting in the ballpark of $500 million Canadian that came into this market. And I remember the releases that I was putting out, the reactions in the stock immediately thereafter. A lot of this was from the gold investment letter. We've had this happen where I was on Real Vision and in 2020 and put out a video about International Tower Hill and McEwen Mining, and 525 million US in market capitalization was created from solely that video within 6 trading days. Um, and I'm going to do it again, and we're going to do it when things improve and I've got a bigger, more receptive audience. For those of you that have been receptive now and are sticking with me and buying up some of these cheap companies, this was one that I pivoted to at that time back in 17 was Metallus. I believe that I recommended it at 15 cents, or maybe it was 12 cents initially. And that stock, and these things happen in 4 or 5 months, guys, went to 275. So I'm going to call it 15, 275 on MTS, and then 30 cents to $5 on GGI. I'm going to show you just two more, maybe three, but there's many more. Sona, this one happened fast as well. I believe I just looked through my records to give you guys, good information on these, and so I'm not misrepresenting where I got involved. I believe that I got in at between 60 and 72 cents on the initial recommendation before Sona went to 16.05, and that was just in 2020 going into COVID. I'm going to call it 70 cents to $16 on Sona. And then we had Phenom, which you guys can buy for a song right now. Incredible value, incredible value. We were the ones right here. You can see, nope, that wasn't us. This was us back then, September 2017. We funded the company at 14 cents. Funded the company at 14 cents, right, right around here. Got a discount to market. Had a 24-cent full warrant. And so 14 cents to the high on this, I'll just use this number, 188. So 14 cents to 188 in 7 months. So you're looking at 5 months, 4 months with Metallus GGI. Sona was 4 months. Encore took a while. Abra Plata took a little bit. Gunyear took a few years. And yeah, so we also had the warrant at 24 also with Phenom. I'll tally those how many X's they were. And then, even like newfound gold, when I got involved with elite members, we were the only ones on tap with this deal, buying it in August of 2020, right here at the bottom. We were buying this thing between 167, I believe, or 169 was when I first recommended it. And it was all us right here, carte blanche. And then I released it to free members before it went to, I believe it was, yeah, 1350. Not quite a 10 bagger. So, what are you going to do? But anyway, these are just a select, handful. These are the ones I wanted to show what has happened for us in the past. It's good to remind ourselves, whether you're doing this on your own or whether it's some of my picks or whatever. This can happen. This will happen again many times for us. I am so confident of it. It's a certainty in life. The question is the timing. 188 divided by 14 equals 13x, and then we had another 12x from the warrant. 25 times our money on Phenom, which was at that time called First Vanadium, in 7 months. That was 7 months. Sona, 16 divided by 70, 22, almost 23x. We'll say 22x. GGI, these were open market ones, so no warrants. 5 divided by 30, 16, we'll call it 16 times. It was 17. 15 cents on the Talus, 275 divided by 15. 18. Now, again, these are not realistic numbers from top to bottom, although I'm sure there might be some random people that were able to stick the lows and the highs. These are examples of massive winners from when I went on record and we had the ability to buy these stocks at these prices. In some cases, half of these, we were financiers and socked away cheap warrants, which is probably the biggest benefit of the elite membership right now, especially because we're socking away long-term cheap warrants, getting huge discounts. And these things are there's the one we just did with Carlisle. I mean, that thing is a 10x. It's got it written all over its forehead. It's ridiculous that we're able to, get into that deal and get a full warrant for 3 years, and in the prices that we paid for a 1,000,000 ounce resource that's got a clear path to 3 to 5 million ounces in Canada of gold, good grades and very good geology. Anyway, that's it for today, guys. I just wanted to walk through some reminders, even for myself. It can get a little discouraging at times looking at these accounts and seeing these things. And I have to ask myself, and I do it every single day. I go through one of my accounts, two of them, which are my active accounts, my most active that I control. And I look at my positions, not every day, but definitely multiple times a week. And there is one account I look at every day. And that one, I look through and I ask myself, do I still like this position? And do I still like this company? And I'll tell you today, this is the last thing I'll leave you with. I'm going to leave you, for anybody who did stick around for this video, I'm going to give you some picks that are going to make you a fortune, and they're going to make me a fortune. And that is Giga Metals is the biggest no-brainer I've ever seen in my career right here. Ever in my career, this is the biggest no-brainer you can ever buy, with a mammoth, monstrous clean nickel, class 1 nickel deposit in Canada with Mitsubishi as a partner. They paid the equivalent of 53 million Canadian to buy in just last year for a 15% stake. Their PFS is going to be out any day, any week. Stock had already gone to 2. Think about this. Phenom already went to $2 on an option that they didn't even own the Carlin asset. It's grown substantially. They've gone to a PEA. We have gold assets everywhere. Where's it going to go next time? I mean, you know what I mean? So you guys know how much I own in Phenom. Giga, I just haven't mentioned it a bit. I am so bullish. I'm actually reluctant. I was reluctant to put out an update on it this week because I have funds coming fresh due tomorrow that I'm buying another 200,000 shares. I'm well over 2 million shares. Again, I've put in over $450,000 US, which is worth, like around half of that right now. A little bit more than half of that. So I'm bringing my average down and I'm going in deep, bigger. My goal is to get up to 3 million shares. And if I can do that under 25 to 30 cents Canadian, I'm going to sock it away and you're going to watch what happens. And the more you have and the cheaper you have it, the easier it is to mitigate your risk on the way up. It's very hard to, nail these things perfectly and buy at bottoms and sell at tops. I don't try to do that. I go in the area and that pays off big. But Giga is such a no-brainer. I'm not even going to get into the fundamentals. Go to gigametals.com and take a look for yourself through the corporate presentation. This thing is stupid cheap, stupid cheap. And what else am I going to give you today? I will give you a quick update on Golden Tag. If you still like silver, like I do, Golden Tag is an absolute steal at 10 to 11 cents, 12 cents Canadian. Looks like it bottomed. And this stock is going to go 5 to 10x minimum in any sort of a wind at the back silver bull run. And I'm going to be putting out next week, though. I am going to put out a full update on Golden Tag, and that is going to talk about the economics of the La Paria mine and their other asset that has billions of dollars of silver in it, and look at a valuation against their market cap. And it's stupid. It's getting very stupid, very, very stupid for Golden Tag. And I'm going to leave it at that for today, guys. You've got some things that Giga, Phenom, Golden Tag. These are some of the smaller ones. I've mentioned Carlisle. Those of you that pick up on that, you can go find that deal and do your homework and participate along with the elites and those of us that did the private placement and buy it a penny, penny and a half above where we're putting in 550 grand this week. And I'll leave it there. Stick with me, guys, and stay engaged. If you have, I keep saying this, but if you have income in your life, you are in a good place. If you have cash, I mean, that's even better. But if you have an income where you cover your nut every month and you can put money to work in some of these junior miners, if you're a retail investor, stick to it, stick it out. We've seen what's happened for us, and there's many more examples, guys. I'm just giving you some of the better ones and the ones I remember. But stick it out. There's going to be a massive swing in our account values at some point. Call it within the next 2 years. Could be within 2 months, but I think within a couple of years we're going to see a swing of the pendulum, and we may go down in some of these names into tax loss selling season and have even bigger bargains. But it doesn't matter. Just chip away, accumulate, allocate capital, deploy capital, do it methodically. Once we get a trigger and it shows that the money's actually flowing back and we can see that others believe what we do, then I'm going to go in even harder in the early stages of that and let everything ride. But for now, it's accumulate, sock away. Some of these, cheap little buys, I'm going to end up looking back. I do this all the time. I'll look back and I bottom ticked it with, a few grand or something at a time with some of these buys along the way, and it all helps. So that's it for today, guys. Thanks for listening and have a great weekend. If I don't talk to you tomorrow, which I think I actually will.